This week on the podcast, we ask why year-end accounts should never be used to make business decisions. And are the Chinese about to take over London? Welcome to the Profit Cash Growth Podcast. This is the podcast for 6- and 7-figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancock, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. Breaking news, Claire, it's finally happened.
What's that?
We've turned the heating off.
Oh, I know, the sun is shining. I actually sat in the garden yesterday eating lunch for about an hour and I got suntan and a little bit of sunburn. So that is a pretty normal summer for us now. So it's happening.
Yeah, I was happy to finally eat al fresco.
Yeah.
Really pleased that the weather's taken a turn for the better after weeks and weeks and weeks of rain. And because we're recording this a little bit early, this podcast, we are about to go on holiday, then people are probably going to have enjoyed 3-4 weeks of sunshine by the time they hear this one, I guess. But I
don't know if anybody else is like me, but I feel like I get so much more value and enjoyment out of a holiday if I'm going when it's like gloomy, cold and wet in the UK. I think going from a nice UK summer of like 22 degrees and glorious sunshine to a European country of 25 degrees and glorious sunshine doesn't really float my boat as much. But
no. It's why most of our holidays are in December, isn't it?
Yeah.
Over Christmas when it's gloomy and nobody's around. But
December, February, March,
anyway.
And October onwards.
Yeah, exactly. Shall we see what's been going on in the news this week? So this week, I want to talk about a really interesting story, and I know that you've used this company, as I'm sure lots of fast fashion ladies, more ladies than men probably, I bet the demographic is. It's Shein, which is the Chinese fast fashion Primark type competitor. Deliver it to your door, direct from China, dead cheap. And the story is, will Shein, they're looking to float their company, and there is a slim chance or possible chance that it could end up on the London Stock Exchange, which would be a real boon for the UK economy. And the reason for this is there's obviously growing tensions between the US and China. And initially they wanted to launch the property on the New York Stock Exchange, but those tensions are growing and mounting, so much so that they're looking at their options. So could Shein end up on the London Stock Exchange, and what would that mean for the UK economy?
Yeah, so Shein, they haven't actually said that they were going to do an IPO when they put their last statement out, but I think it's been leaked and they've signed contracts with various big American banks to do this. So I think it'd be very unlikely if they don't list on the American stock market. It's actually what's called an IPO, which is an initial public offering. That's what that stands for. And obviously there is a big question mark over Shein because they're a Chinese company, and I think everybody around the world knows that China is not particularly known for its labour rights and its treatment of employees and things like that. And also from an environmental perspective, are the days of fast fashion quite rapidly declining? I'm not so sure that I'm a big fan of them. I did try them. I bought a few things from them, particularly if we're going on holiday and I need a couple of bits, but otherwise, I'm always a fan of going to the slightly more high-end shops like Hobbs, John Lewis, places like that, because you buy something and, I've got dresses in my wardrobe that I've had for 10 years from places like that. They just are so much better quality. So I don't know whether this is a bit of a current trend that will die out.
I think, budget / affordable ways of living, whether that's clothing or whatever that is, feels immensely resilient. I mean, it peaks up during financial crises. So you see people like the financial crisis spawned the likes of the B&Ms and Home Bargains and all of these low discounting shops, and they've stuck around as times got better and then back again as times got worse. I think the consumer is going to speak with this one, and I think there is absolutely no doubt that, Shein's one of them. The other one that is keeps popping up is Temu, I think it's called. Temu. They're just selling, they're like the Alibaba / Amazon of China that just sell directly into the hands of consumers. immensely low prices direct from the factory.
Yeah, I mean, there's loads of them. Like, you can buy direct from Alibaba, there's AliExpress, there's Temu, there's Cider, there's all of these different brands these days that are doing it. But will we see Shein on the London Stock Exchange? I mean, they're trying to list in America, but there have been concerns over the labour rights, and that is holding up the IPO process. I must say that I would be interested to see what happens if Donald Trump becomes president, if he allows this to happen, because he is a big fan of, America first, and he thinks that these companies like Shein shouldn't be allowed to so freely sell into the American markets because it's taking business away from American businesses. However, adding an IPO of nearly 100 billion to the American Stock Exchange would be a massive boost, and that's one of the reasons why we want it in London.
Yeah, but
because the London Stock Exchange is actually notoriously declining. I think we've dropped out of the top 20 now, haven't we? So
yeah, I mean, I think he's not a fan of China after COVID. That's not a good Donald Trump impression, is it? But yeah, I think will it list on the London Stock Exchange? If I'm honest, absolutely not. The reason is that our London Stock Exchange actually has not grown at all in real terms once you apply inflation in the last 22 years.
Yeah.
It's one of the worst performing stock exchanges in the world for growth. I think, if you compare that to the US, where it's tripled in that time, I'd be amazed if they end up on the London Stock Exchange. The only reason they regulatory stability, really, because it's obviously very strong from a regulatory perspective.
Well, so you say that because I was just about to say that since COVID, since we don't have that close tie to the EU anymore, there is generally a consensus that we're not as stable as we once were, and the risk of coming to London, it's actually seen as a slight risk now. You would go to other countries, I think that also what's happening with TikTok, which is obviously a Chinese company as well, is quite telling. The world is trying to turn the thumbscrews on China a little bit. How much they will be able to do that, I don't know. But will we see Shein float in America? I think we probably will. And if it's not America, I highly doubt it will be the UK.
Yeah, I mean, the big thing about this whole arrangement with the Sheins and the Temus that's really got a lot of retailers in the UK up in arms is this, and I don't understand the level of detail, but it's all to do with avoiding customs tax, isn't it, coming into the UK?
Yeah.
So that they can sell their products even cheaper. So you've got that you've got that low labour cost of manufacturing direct from the factory, and then avoiding all of the import taxes as well. I mean, it's no wonder that the UK companies or whatever country they're putting it into can't compete. So it's pretty crappy for the countries they're selling the products into, because our consumers are lapping it up.
Shein have got bonded warehouses in the UK as well. So when you bring goods in that are subject to import taxes, you have to pay the import taxes the minute they cross the UK border. But there are certain things called bonded warehouses, which essentially those warehouses, you're saying that they're not subject to taxes. So as long as you move the goods from like a aeroport, as long as you move the goods from an airport or a ferry port straight to a bonded warehouse, then they only have to pay taxes when they leave the port as well. So it's another edge that they've got over, for example, UK companies that might be importing from China. They're going to be paying the import taxes as soon as those goods come in, rather than when they're sold, whereas Shein are only paying any taxes when they sell things as well, which is a big cash flow boost.
Well, there you go. That's Shein. That's our new story this week. Will they end up on the London Stock Exchange? Our consensus is we doubt it very much. But it made a nice story to read this week. It gave us a glimmer of hope that we could still attract even the warblings of a major international business into our country.
Who would have thought that the UK Stock Exchange would be so desperate to attract one of the, what I would argue is like quite a questionable company from an ethical standpoint. I
think after 22 years of no growth, they'll take anything that's a growing company to help prop it up and move
the London
it
Stock Exchange
in the right direction.
has become desperate.
Indeed. Anyway, let's move on to this week's deep dive. So this week, Claire, we're asking the question why year-end accounts should never be used to make decisions in your business. And we're going to unpack all of the reasons for that. You've done a great YouTube video on this one, which again goes through this. So do head over to the YouTube channel if you want to watch this visually. And do you want to start, Claire?
Yes. So, sorry, Simon's slightly thrown me off there because we agreed the segue that we were going to use into that and he has not used it. So,
Well, go on, explain the segue.
Well, we were going to talk about how most small businesses have got a financial year end of 31st of March, because that just makes things a little bit easier from a tax return perspective for your personal finances as well. And are you one of those businesses that may be sitting there waiting for your accountant to prepare your accounts so you know how much money you've earned this year?
That is true. This question is born out of anecdotal responses we get from lots of people all the time, which I hate at this time of the year, which is they are waiting at the moment to understand whether they made any money last year, which I just find perplexing. I've been mentored and grown up in an environment where analysing your data on at least a monthly basis and making decisions that steer the business has just been so ingrained in me that it feels so alien when I hear companies, and it is most small companies, that just rely on that accountant giving that end of year snapshot. So I've made money, or I need to pay this amount of tax.
Yeah, and I have been doing one of my, it's a lead generation, is that businesses can come to me and get a free review of their finances and their business, and I'll give them some tips on how they can increase their profits, improve their cash flow and grow their business. And quite a few smaller businesses in particular, normally sub 1 million, I would say, come to me and they say, I'd like to book in for the review. I'm just waiting for my accountant to send me my accounts. And I can't do a review of your finances based on your annual accounts, despite my years and, nearly 20 years of experience working in finance and looking at annual accounts and preparing annual accounts. I cannot give you pointers about your business based off your annual accounts. So if me as an expert can't do it, as a business owner,
how can you possibly run your business and make key decisions? Well, let's just to put some structure around this. We've got a number. Let's just whiz through these one at a time, because unpack this, because there's so many reasons not to rely on those. So the first one is time lag. So talk to us about time lag. I mean, we talked about that a little bit. That's sort of the main aspect we're talking about, is that how can you run a business when the information you're about to be delivered is not only a year old, but probably 18 months old?
Yeah, you can't just get annual information, can you? No. Like Simon's just said, we've gone past the 12-month stage. So what happened in your business 12 months ago? It's not relevant to make a decision about it now, because you can't do anything to change that. If you've had something bad happened in your business 12 months ago, like your margins decreased or some of your costs got out of control or something like that, then that's been happening for 12 months. The negative impact of that has bed into your business for 12 months, and it also makes it much more difficult to do something about it.
Yeah, this would be like weighing myself today and then waiting 18 months before I bought the clothes to fit me and hope that in 18 months' time I hadn't put on weight. I mean, it's just crazy, isn't it?
Yeah, it is bonkers. I think, if you're that's a really good example, actually, because if you're on a diet or you're trying to lose weight or monitor your weight, you generally get on the scales every day, once a week, as a minimum once a month. You're not going to wait and just weigh yourself annually and hope that you've lost that 3 stone that you were hoping to lose.
Exactly. So that's time lag. Then we've got limited detail. So talk us through limited detail and, the difference between the limited detail you get in annual accounts versus what you could or should be getting. Yeah,
so in the UK and actually internationally, there is a specific format that accounts must be published in. And the reason for this is so that as a bank, as an investor, for example, you're always comparing like with like. You get the same format of accounts for every business that you look at. But small businesses in particular have got so many different nuances, and they're so unique that when you have management accounts instead of annual accounts, the management accounts are completely bespoke to you. So the categories that you've got, the formats that you have, the ratios that you have, the layout is completely, or should be completely, bespoke to your business. So it should pull out the most important information that matters to you, because you, for example, Simon, as an estate agency, you're spending $5,000 a month on marketing at the moment, but another business that I know spends absolutely nothing on marketing. So would we have a marketing category on both of those P&Ls? No, it's not relevant. So it's things like that mean that your management accounts should be entirely bespoke, and the level of detail and the granularity of annual accounts just is not helpful for small businesses.
Yeah, and I think that wraps a couple of the other points here. So incomplete picture is another part of that, and I think you picked on that quite well. I think the other one that wraps into that is risk of misinterpretation. I do this all the time, where I'm just a bit nosy about companies. I say to you all the time, I can get their annual accounts. What can you tell me about the company, Claire? What can you tell me? Are they, how much profit do they make? And of course, it doesn't show that level of detail, and you can be at risk of actually making assumptions about the information that is on there, which A, is limited, but B, is also really out of date as well, and actually just come to the wrong conclusion completely. And if people are doing that with other people's businesses, analysing them, and then how could you manage your own business with that level of, information that is not got the detail in it?
Yeah. Also, there is something in the UK called accounting principles, and when
that
you go,
sounds riveting.
It does sound riveting, but basically it means that accountants can make a judgment call rather than being black and white rules that say you must treat this like this and you must treat that like that. It's a bit more open to interpretation, and it is possible to, let's use the word, fluff the figures. You can do things that make the accounts appear in a certain way because that's what you want to show on your annual statement. So an example is, I used to work in the corporate world, and we would normally pay a supplier on the last day of every month, and our biggest supplier that we normally paid about 20 million to, we wouldn't pay them on the 31st of December. We had an agreement with them where we pay them on the 1st of January. So what that did is, the one day of the year that we have to report our financial statements, our cash was increased by 20 million. The rest of the year, we were 20 million down, but because we agreed that with our supplier that we'd pay them on the 1st of January instead, it looked like we were a much more cash-rich business than we were.
Yeah.
So it's very, very easy to play the fact that just one day you need your accounts to look a certain way, and you can do that.
And large companies actively do this. I mean, it would be wrong to to suggest that they don't. I've worked for large corporate companies, especially those that are listed on the stock exchange. Their accountants are incredibly clever about how they, within the legal parameters, I'm sure.
And do you know what? Small businesses could do that too, especially if you're a small business that's going to be applying for a loan or finance or something like that, or even a mortgage.
Yeah.
And you know that your accounts are going to be under scrutiny. What can you do to increase your cash balance, get your customers to pay you early? There's things that you could agree as like a one-off arrangement with people that you have close relationships with that can make your accounts appear a certain way that work in your benefit. So there are some pros and cons to it.
The last big company that I worked for, the finance director there and the MD and various things, they just accrued loads of stuff into what they call a slush fund, and then they just release it out into the business when the business wasn't doing so well. I don't really know whether that's legit or not, but that's what big companies do. So they just prop up their accounts at times when they just spread the hay when they make it across years that are not so good. But so when you're in a very big company, you're subject to what's called a statutory audit, and there are legal auditors, and they come into your business once a year and they have a look at absolutely everything. Now, they look at your IT systems, they look at your HR processes, they're doing a deep dive on absolutely everything that you do in finance, and they're assessing the decisions that you make and the transactions that you record to say, are you painting a true and fair picture of this business? Yeah. But the level of materiality is massive. So, I worked in a business, and if the materiality was less than $1 million, then the auditors were like, no, that's fine, we won't look at that. Yeah, it's all perspective, isn't it, depending on the size of the business, and some of these numbers can be huge.
I mean, yes, however, it's around 0.5% of the annual turnover was the materiality, which even still, I think that £1 million, I would like to know if there was a misstatement somewhere in my accounts of £1 million. So yeah, I think even that audit process, when you're looking at accounts and they say unaudited, it means that they're not subject to an audit. And if you look at bigger companies, they say audited, it means that a legal qualified professional has signed those statements off to say that they're true and fair.
Yeah.
But even then, it's questionable.
Sure. So what about seasonal variations and using annual accounts for that kind of thing?
Yeah, so we've just touched upon some of those. The annual accounts are prepared once a year, and they're a snapshot of that one day, essentially, what your accounts look like on that one day. Whereas in a business, I think it would be incredibly rare, even if you're a business, that you would say you weren't seasonal, because we tend to think of seasonal businesses, I don't know, like ice cream businesses and things like that. But every business has some level of seasonality, particularly over the Christmas period and the school holidays and things like that, whether you're up or you're down. And the annual accounts don't show that. So how are you dealing with those seasonal periods? Are you adjusting your pricing to try and make sure that, if you're particularly quiet in school holidays, are you doing offers to try and attract more people into your business? But then what does that do to your gross margin and therefore your profits? Yeah. You can't see any of that.
It almost sounds like you should be using these numbers to almost drive and build your business's strategy around them.
Yeah, absolutely.
Interesting. Do you have a view as to? I found it a bit perplexing that in a world where things have got faster and faster and faster, and the amount of data we now have is just insane. Why, in the accounting world of business, that doesn't seem to have kept pace with it. So, in everything else, we'd be, all over our marketing, checking the pay-per-click every few minutes and getting reports back in real time to be able to see that. But we don't do that with our financial numbers of our business anywhere near. I don't feel like that's picked up pace almost at all than it used to. I bet the same percentage of people do monthly management accounts and really focus on them as those that don't 20 years ago. But so why is that message not getting out? Are you just not out there shouting about it enough? Well, what's going on?
Part of the issue is that management accountants like myself are actually, it's quite a niche in accounting, and most people think that they've got an accountant or a bookkeeper, but these are people that are trained to do your year-end accounts and to do your tax returns. So even those accountants and bookkeepers don't understand the value of management accounts and probably are not properly trained to produce them either. So from that perspective, even in the accounting world, actually a lot of my work comes from other accountants and bookkeepers when their clients say to them, I need management accounts, I need a cash flow forecast, and it's out of their skill set. And so a lot of my referrals come that way. And I think that's part of the issue is people, particularly small business owners, believe that they've got their finances covered because they have an accountant, but actually their accountant is just doing their year-end accounts and tax return. I was on a podcast, somebody else's podcast last week, and we were having a really interesting conversation, and we kind of likened it to going into a annual review with your boss. If you imagine yourself in a job and you go into your annual review with your boss, and your boss just said to you, this is how much you've earned this year, thank you very much, goodbye. And you would be like, well, hang on a minute, where's the feedback? Where's the praise for this big project that I got? Where's the feedback on this area that I'm not doing so well in? Where's the training?
You would, I would
the
just
development?
go, cheers, see you later.
Where's the progression plan for what's happening over the next year, and what am I going to focus on, and what are my objectives? And that is what management accounts are to your business. Because when you own a business, you don't have a boss giving you that feedback, but your management accounts give you that feedback. They tell you how well you are running your business and how good you are at your job as an MD.
Cool. And then the final bit that we have on here, you said to me before we started, this is the most important
thing.
Compliance versus decision making.
Yeah, so we touched upon that a little bit when I talked about the legal format that the account should be in. And the primary goal of your accountant when they're doing your year-end accounts is to legally comply with the filing requirements of Companies House and to prepare your tax returns. That is the goal of the reason why they're preparing those documents.
So they're actually not your annual accounts. They're not really provided for the value of you as the business owner or you as the business. They're actually provided as the value to the HMRC, and just for the public office. Yeah,
they're a box ticking exercise.
Yeah.
You have to submit annual accounts, you have to submit your tax returns, and that's what you're paying your accountant to do that for. And yeah, the value that they bring in your business is pretty much next to nothing. And you can also tell that because how many accountants out there use those annual accounts and sit down with their clients and say, oh, I noticed this in your annual accounts and I think it shows this, and I think that this is the opportunities or these are the problems that you've got. No accountant does that because it's not bloody possible to do it with a set of annual accounts.
Fantastic. Well, when we did some research on this, there's a fantastic statement that's shot here, which I think really just sums it all up. It says, in summary, while annual accounts offer valuable insights into a company's financial health, they should be complemented with other sources of information, such as regular management reports, market analysis, and real-time data to make well-informed business decisions. What a nice way to wrap the whole thing up in a simple sentence. But I think that's the sentiment of it. So I think that gives you a nice roundup as to why year-end accounts should never be used to make decisions in your business.
And Simon's going to tell me off for doing this, but it feels like a silly opportunity if I don't say it. If anybody would like management accounts, feel free to visit my website.
Let's move on to this week's Profit Cash Growth Extra. So this week on Profit Cash Growth Extra, I'm being really selfish because it's a personal one that's probably only specific to my industry and some of the broader construction and development industries. But this week, I've got a giraffe.
You do love a giraffe, don't you? We went into Dunelm one time and there was like this hideous, 4-foot giraffe, and you said, can I have it? And I jokingly replied yes, and so now we have a 4-foot giraffe in our living room.
Not that kind of giraffe. I've got a Giraffe 360. As you know, I own estate agents, property development, property investment companies, so I work heavily in property. This piece of equipment is game-changing to the industry. So basically, it's an all-in-one piece of equipment that will provide the photographs in professional quality standard. It will scan and provide a floor plan for properties or construction to 99.9% accuracy, so far better than a human could have ever done it. And it also provides one of those lovely virtual walk around tours so that you can actually view a property, walk around the property online if you're not in the local area. It does all that in one piece of equipment. All of the stuff disappears off to a central processing center where they draw up all the bits and pieces, and it comes back within 24 to 48 hours in my inbox with all of the stuff ready to just be uploaded and put straight on the market. This has been a wonderful piece of equipment for the business. And if you are in, it's surveyor grade equipment. So if you are sort of a surveyor or an estate agent or work in real estate at all, do check out Giraffe 360. Absolutely fascinating bit of equipment and worth every penny for me. It's really just about efficiency. This is a massive productivity piece because it's basically saved us probably around an hour and a half per property by using a piece of kit. So this is where technology really works.
And there's loads of tools out there these days that you just don't really know exist unless somebody mentions it or you happen to see an advert or something. So that's one of the reasons why we've got the Profit Cash Growth Extra on every podcast, because you just don't know what's out there sometimes.
Exactly. So thanks for joining us this week for the podcast. If you, again, do want to check out Profit Cash Growth, go to the website, profitcashgrowth.com. Check out the YouTube channel where there is, as I say, a video in more detail about the why you should never use annual accounts to make your business decisions. And do like, subscribe, and please share this podcast with anyone that you know that owns a business, because I'm sure they're going to get great value from it. And we'll see you again next week.